Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME Group event contracts to trade E-mini, S&P, NASDAQ, Dow, Russell 2000, gold, silver, copper, euro, crude oil, natural gas, and Bitcoin. Today, I have a great show for you. I'm actually going to talk about what these event contracts are. A few people have seen me and other people post screenshots on Twitter when we win or lose, and you guys have been like, what's that? What are you doing over there, Cordova? And so I thought I would just spend a few minutes today talking about how I actually have been trading these since they came out, what's worked for me and what hasn't, because I think I have a couple of good strategies to share with you guys. Okay, so let's go to my slides here. I put together slides, this is a very important thing. So let me go backwards here. Okay, so first of all, what are they? They are a fixed risk, non-leveraged way to play all of those things that I listed. They're basically like a way to trade one-day options inside of the futures world without having to necessarily have a futures account or to risk a whole lot of money. So how do they work? Well, they are yes and no. So what you see, go ahead and if you want, you could download the app. You don't have to even, I don't think, put any money in there or whatever, but you basically see a bunch of different strikes and you try to predict where the price of something will close. So if at the beginning of the day, I'm just going to pick a round number, if we're at 4,000 and you think we're going to close above 4,010, then you would have yes to 4,010. And then if you thought we were going to close lower, so 3,990, you would say no to that. And basically, they range in price between a quarter and 1975. And so if we are at 4,000 and you take the 4,000 trade, it should be around $10, right? Because you have a 50-50 shot of getting it correct, one would imagine. Sometimes I think things are 50-50 and they actually aren't. But so it's around $10 if you're right at that strike. And then as you go further out, it's less expensive because it's more unlikely that they think. I'm going to talk about that. And then the most you can lose is, of course, what you put down. It's not like with futures where you could lose your butt, if something went really wrong, that kind of thing. And then the max payout, like I said, is $20. So I think my record is 75 cents all the way to $20. Did I max out on the number of contracts I probably should have? No, I did not, because I wasn't confident, because it was very unlikely. It was very far away from price. But I'm going to talk about the best ways that I have found to trade them, because what I started out doing when I first started trading these, I would just at any random time think, okay, well, here's where I think it's going to close and take the trade. And then it wasn't really working for me at all. You have to actually trade them. You have to actually wait for the right opportunity. So in my opinion, the one of the best times to trade them are on trend days, or if I've looked at the quant stats and I think there's a high probability of us actually having a trend day. So first, I'm going to share my screen here. Oops. And actually, let me go to the dashboard. Don't know why. Get it. I'm going to do this live. Now you can see. Okay, so I go to the dashboard. And I do this, by the way, I do this every night. I know I'm a weirdo, but I do it every night because here's why. Because there's these quant stats here. And you can see here, if we open up, there's a 52% chance that it closes above the open, wherever that open was. If we open down, there's a 58% chance it closes above the open. So what that's saying is, if it opens down, and anything over 55% is great. So if it opens down, then I'm going to look for an opportunity to buy one of the yeses that's one or more away from the opening strike, depending on how yesy or bullish I think it is. You can do the same thing in reverse, of course. But I like these because I mean, look at NQ today. NQ, if it were to have opened down, which I don't think it did, I think it opened up, but you would have a 61% chance of closing above the open. And when you ever see 60 and plus in these, you're like, hello. Like, I personally thought today might be a down day, but when I looked at these stats, I thought, well, you know what? I don't know, because these look pretty freaking bullish to me, right? 54, 55. RTY is 50-50, right? But I do look through these every day. And so if I see something like 60 or 55 or something like that, that's a day where I'm going to, wait for that 10 o'clock or 11 o'clock hour dip and then go for it, because I think that's just higher odds. Okay, so let me go back to the slides here. All right, so that's one of my favorites. And so you just wait for the dip. If you have like a good quant stats, you wait for the dip. By the way, if you don't get a dip, did you miss out on anything? No, you did not. So but then you have the best odds. And I personally don't like to buy, and everybody is going to have their own thing. I mean, if you bought one that's more probable, it's going to be $15, and then of course it closes at 20, and that's a 25% gain if it's correct, right? But I don't like to do that personally with these. I like to get the cheapies. I like the $3 to $6 range if I can get, even lower if I can get it, because I find then that I can take partial profit, whatever. But anyway, so if I think there's going to be a wide range, like for example, the Fed day, right? And whenever Fed day comes, we'll figure out where the price is to start the day, and then figure out where you think the lows or the highs might be, because it tends to do one thing and then it does another. And then I put a bunch of stink beds in on the opposite sides. So that way, when one comes to fruition, I can close it, and then I just keep the other ones. So, and if you get a yes and a no, if there's like if you think there's going to be a big range and you get a yes or a no, and the total of the two of those contracts is less than $10, but either one of them comes true and you get $20, right? So that's what I like to do on a day that I think has a huge range, is I look for the cheapies on either side of what I think is, potentially the midpoint. That's objective, of course. And then I go for it that way. And that's what I did the other day when everybody's like, what did you do? Because we're coming out of a diamond consolidation, and I figured, I didn't necessarily think I was going to go both directions, but I thought, you know what? It's going to go probably big one way or the other. I don't know which way it's going to go. I'll buy both. And even if one goes to 0, if the other one goes to 20, voila. That day, because it went up first, and Cordova brain, lizard brain, thought it was going to go down, I actually took profits on the ones as it went up. And then I was like, oh no, I hope it doesn't keep going up, and then I would have taken a small loss overall, right? But I took profits on the ones that were going up without them reaching $20. And then as it went down, the ones that were down got to $20. So that was like, it was like the perfect combination of things. So that is like a perfect day to trade these. And I'm going to go ahead and look at my Trade of 8 event contracts here on my screen. So this is gold. I bought this today. So gold was pooping here into the start of the day, and then I could have bought the ones that were 1965 here, because it would have been $10 at the time, but I didn't know. I thought, it could keep pooping. So instead, let me actually make sure I'm looking on my phone to make sure I'm saying the right information. Hold on a minute. This is what happens when I do live videos with one screen. But I don't like to have more than one screen. I'm actually very much of a purist in that way. Okay. So I bought the yes to 1970s when they were $3, and now you can see they're $10. And so I could close it out now because it is 1970. But I think I'm going to let it go a little bit further. Now, that actually brings me, and I'll show you also the other screen that Anthony put together. That's like, I use this phone app. I'm not a complicated person, y'all. Like, I just look at this phone app mostly because I just think it's easy. And, but I'll show you that later. So let me go back to the slides here. And let me tell you about my last favorite setup with these. So it's the last hour LFG trade. Okay. So this is kind of crazy. If you watch these, so let's say we were at 3,992 or something like that. Okay. And then it's like 3 o'clock in the afternoon, and you think to yourself, I bet they're going to pin it at 4,000. Do I know whether or not they're going to close it above 4,000 or not? No, I have no idea. But I know that they're probably going to take it from 392 up to go and then make the decision. So what you'll find is a lot of these event contracts during the last hour are like super cheap, because even though it's only 9 points or whatever it is away from where you think they might close it, they because it's only an hour left, there's a lot less Greek stuff in there, right? So, but you'd be very surprised at how much you can get sort of a last minute bargain. And if you're only paying $2 or $3 and you can yeet out of there when it gets to the 4,000 or wherever you think they would pin it, then you're doing pretty well. And what I usually do for those is I take off if it does do that, and it often does. If it's near a round number, it's like, hello. Of course, they're going to pin it there. But I take off what I put into the trade, and then I go from there. So, and let me just see here. I think that was it for today. There is a more complicated interface that you can download other than this phone interface. It's, you can use it on your computer or whatever, but I don't need to see level 2 for these. Like, it's just so simple. And you also don't need a whole lot of money. You can literally just with a couple $100 actually do very well trading these event contracts. So that's why I like them. All right. Well, thank you so much for joining me today. I really appreciate it. I hope you have a great trading day, and I will see you on the interwebs. Okay, bye.